But here we are a week later, and gold is now over 4,200. So gold has added $200 in 1 week. Silver closed today above $53. Remember, $50 was resistance. It was a big double top. And what was I saying on this podcast? I thought that we would blow through that double top and that 50 would become resistance, which is now the case.
In today's news recap, gold soars to record $4,288 on Comex as US-China trade tensions escalate. Gold prices on the Comex futures exchange have shattered previous records today, surging to an unprecedented $4,288 per ounce. This historic rally is primarily fueled by a dramatic escalation in trade tensions between the United States and China, prompting a widespread flight to safe haven assets among investors grappling with heightened global uncertainty. The immediate aftermath has seen a significant shift towards risk-off sentiment across financial markets, with analysts now recalibrating their price targets for the precious metal, many forecasting further gains. The record-breaking ascent of gold underscores the profound impact of geopolitical instability on financial markets. As the world's two largest economies engage in a renewed and intensifying trade confrontation, investors are increasingly seeking the perceived security of gold. This surge marks a significant milestone in gold's sustained rally throughout 2025, reflecting a year of robust institutional demand, central bank accumulation, and substantial inflows into exchange-traded funds, all indicative of a market bracing for prolonged uncertainty. The immediate catalyst for gold's spectacular rise to $4,288 per ounce on Comex today is the rapidly deteriorating relationship between the United States and China. What began as intermittent trade disputes has snowballed into a major economic and diplomatic confrontation, with both nations implementing and threatening severe retaliatory measures. This intensification has created a palpable sense of unease across global markets, driving investors en masse to traditional safe havens. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
If you get a chance to buy silver anywhere near 50, do it. But again, I got no problem buying it at 53. I said the same thing when silver broke above 30. I said 30 is the floor. So if you have to pay 32 or 33, what's the big deal? You don't have a lot of downside risk. So even though silver might pull back to 50 and a half or maybe 49 and a half, so what? Buy it now. It's not that much downside, and it may never pull back. We may never see sub 50 silver again. Now, maybe we will. I don't know. We're only $3 above it. But we may be at 60 before we're back at 50. Look at the momentum. In fact, if gold continues to rise $200 a week, we'll be at 5,000 a week before Thanksgiving. And if we keep rising by $200 a week, which percentage-wise would be a smaller percentage if we're at 5,000 than 4,000, but if we keep going up at 200 a week, gold will be at 6,000 before Christmas. Now, I don't expect gold to be at 6,000 before Christmas because there's got to be pullbacks at some point, although maybe not. Who knows? But it's clear that gold is going up. I mean, year to date, gold is now up 60%. Silver is up 84% in 2025. We still got 2.5 months left of the year. We have not had a year like this in precious metals since the 1970s. And that's not a coincidence that what's happening now hasn't happened since the 1970s, because we are living through a similar economic period. It's not just that we got stagflation. which we had in the 1970s, and we're going to get a lot more of that in the 2020s. But again, 1971, we kicked off that decade going off the gold standard. That's what set all this in motion. That resulted in a major dollar depreciation, and gold went way up during the 1970s. Well, something is happening now that is just as significant and maybe more. So back then, we went off the gold standard. So we told the world, hey, we're still on the dollar standard. We're just going to not back it by gold anymore. So we're going to renege on our commitment. We're not going to give you gold for your dollars. You could just hold on to your dollars. And the world basically did just that. The world stayed on the dollar standard, despite the fact that we, pulled the rug out from under them in that we reneged on our promise to pay gold for their paper. But they continued to, keep the dollar as the reserve. Now, they marked the dollar down. The dollar lost 2/3 of its value against other currencies, but they still held it as their primary reserve asset. What's happening now, over 50 years later, is now the world is taking action.
In today's news recap, HSBC raises average gold price forecasts for 2025 and 2026. HSBC has raised its 2025 average gold price forecast to $3,355 per ounce from $3,215 due to safe haven demand driven by geopolitical tensions, economic uncertainty, and a weakening U.S. dollar. Sentiment remains bullish as rallies are expected to continue in 2026, aided by official sector buying and institutional demand for gold as a diversifier, the bank said in a note dated October 15th. Mounting fiscal deficits in the U.S. and other major economies are driving increased demand for gold, HSBC said. Gold, traditionally seen as a store of value during times of economic and geopolitical instability, has risen over 60% so far in 2025 and hit a record high of $4,250.89 on Thursday. China on Thursday accused the U.S. of stoking panic over Beijing's rare earth controls and said Treasury Secretary Scott Bessent had made grossly distorted remarks about a top Chinese trade negotiator, rejecting a U.S. call to roll back the curbs. Central bank demand is likely to remain high, buoyed by geopolitical risks and dollar diversification, but below peak 2022 to 23 levels, HSBC said. However, if the U.S. Federal Reserve delivers fewer rate cuts than currently projected for this year and next, it could temper the rally, HSBC said. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
They are now moving off the dollar standard. And this probably has even bigger implications for us than going off the gold standard did, either for them or us, because our entire economy, our entire way of life over that time period has evolved to become dependent on the dollar's reserve status, dollars that we can create out of thin air. Not that we have to back by gold or anything. We just conjure them into existence, and we use those dollars to buy consumer goods that we don't produce. So we get to live beyond our means. And then the world is in a relationship where they loan us back the dollars they earned, selling us stuff that we didn't make at low interest rates. So now we can go into debt and buy more stuff, and we could buy assets, and the stock market goes up and the real estate goes up. But our whole phony economy is completely built on the foundation of the dollar's reserve status, and that's the rug pull. That's what's happening. That's why gold is doing this. Right? It's not just a random coincidence. And of course, the significance is being lost on just about everybody when I hear the discussions on gold. But probably one of the most significant admissions that I've heard was from Jamie Dimon, who is a highly respected guy. And Jamie Dimon was quoted as saying, gold can easily go to 10,000. Easily. And I agree. It can easily go to 10,000, and it very well will go to 10,000 and a lot higher than that. But here is the more significant aspect of the Jamie Dimon quote. Jamie Dimon said, quote, "This is one of the few times in my life it's semi-rational to have some gold in your portfolio." This is one of the few times in his life. I mean, he's my age, I think. He's been around for a long time. But he's saying in his entire life, this is one of the few times that it's semi-rational, like not completely rational, but at least there's a modicum of rationality where you might want to have some of your portfolio in gold. Now, first of all, clearly, if gold is above 4,200 and 20 years ago, it was 25 years ago, it was below 300, and that was certainly within Jamie Dimon's lifetime. It was within his career, not just his lifetime. But obviously, if gold has gone from 250 to 4,000, that means it's always been rational to have gold in your portfolio. Not just semi-rational, 100% rational. Gold has outperformed the S&P 500 since then. So if it was rational to hold stocks, it was certainly rational to hold gold. The significance is that even though it was rational to hold gold 20 years ago, 10 years ago, 5 years ago, Jamie Dimon didn't realize it. See, what he's actually saying is not that this is the first time that it's rational to hold gold. This is just the first time that he understands the rationality. You see, up until recently, it was just guys like me. I would come out and I would try to explain to people when gold was 300, 500, 800, 1,000, 1,200, 1,500, 2,000, why they needed to own it. And people didn't see the rationale, right? They thought I was nuts. They thought I was crazy because I was worried about the dollar. I was worried about the deficits, the budget deficits, the trade deficits, all of the things that Jamie Dimon is now finally worried about. Finally, with $4,000 gold, the problems that I was worried about at $400 gold suddenly concern Jamie Dimon. Now, the truth of the matter is they were a problem back then. The difference is it's a much bigger problem now. And the more significant difference in that is had people like Jamie Dimon recognized the problem that I recognized 20 years ago, maybe we could have done something about it. Maybe we could have diffused this bomb before it went off. But because we waited as long as we have, there's nothing to do. I mean, it's going off no matter what. It's impossible to diffuse it. And so we're going to have this massive crisis that I have always been concerned about. I've always been warning.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.